Hey guys, all right, I want to go over a couple of trades that I did today. So here we're looking at the chart for the semiconductor index XOXX. We're looking at a 1 minute time frame. I'll show you why I took this trade in a second. So first here, the green line was my average buy price for shorting it on SOXX. So we have a look here. This is the inverse ETF. I bought at an average price here, $2.05. And basically, so the green line here, obviously weathered all of this down and here, and then we ended up finding support down here. And I ended up selling roughly about here and making $3,650, just under 50. 3647 is what I ended up making. Here were my trades that I took here. So we can see here, first one, 10,000 shares, 25,000 shares, 15,000, 15,000. Then I sold some of mine in bill and then sold all 65,000 there for a profit of, like I said, $3,647. Now, the reason that I knew to get out of this was because of the institutional indicator here. I saw that there was heavy buying here from the institutions. So that told me to get out of it and that we'd likely see a bounce. And if we go to the forum, the Discord, you can see here 9:53, which in terms of market time from where I'm located, that's 10:53. I'm seeing institutional buying here at support on all indexes. Was holding SOX at $2.05. I sold at $2.11, made $3,900. Obviously, a little bit of a overcalculation on that. Actually, 3647 was what I made. And then, well, that only took 8 minutes to be right. So I called that at, what time was it? 9:53, which would have been 10:53. So in between these two candles here. And obviously we saw that it wasn't breaking down. It was starting to pick back up. So time to get out. And that was across, like I said, all of the indexes. So we have a look at the Qs. We can see that was institutional buying there as well. The SPY, institutional buying, and SMH, also institutional buying. So gave me the reason to get out of the inverse ETF, which is very good. The indicator came in really handy there. The reason why I originally took the trade, if we go to a daily chart, and let me clear up some of this, here are some of the signals. See, we've been trading within this parallel channel. We've broken out above the channel. More than likely going to go back in. And based on Fibonacci levels, we are at the 100% measured move. So that is why I decided to take the trade. And the other reason is why I decided to exit the trade. Okay, next I want to go over Fibonacci and how you can really utilize Fibonacci to improve your trading. If you're not aware of what Fibonacci is, look, do a bit of a Google search. What is Fibonacci? It basically applies to everything like architecture, mathematics, number sequences, everything. Beautiful women, it applies. It applies to everything. So look, when you look at artwork and archways and things like that, anything that has an appealing thing, it actually has a Fibonacci ratio, and that's why it always works out. That's what it is. So first what we're going to do is we're going to get the trend-based fib extension. We're going to take a low here. So this is from the 2020 COVID low. And we're going to magnetize it with the control button. And we're going to go to the high and then back to the low. And that's going to give us a 100% measured move here of 609.83, which you can see intersects perfectly here to the February high. So now we're going to take the low to the high to the next low And we're going to remove that 618. It doesn't need to be there. And we see that that 100% measured move intersects here with the market high in 2024. Okay, so now we're going to take the low to the high back to the low. And that 100% measured move intersects right there at the February 2025 high. Now we're going to take, because we're still on that same run, I'll explain why we're on that same run. It's based on Elliott wave theory. Give me a second to do that. I'll take this low, and that brings us here to the 100% measured move area of 682.81. So the market essentially shouldn't be here right now. Now, in terms of Elliott wave, everything moves in a 5-wave pattern, and we can easily draw that wherever it is on here. So we've got the start of our first wave, our second wave down, then we have the third wave, which is all of that run, the fourth wave down, and now the fifth wave there. Now, technically, we should say this, that the Fibonacci move, which is unlikely to play out, will actually be from the start of the second wave to the top of the third to the bottom of the fourth, because it should replicate the first wave. Doesn't always play out, and it's not going to. But that would put the 100% measured move at 746.92. So the point of using Fibonacci is to obviously see where the levels are going to be at. And in this particular instance, I've done these ones in different colors, so it's easier to identify each run. And you can see that the SPY really respects the 100% measured move, and it should be, said 100% measured move area is the area. Doesn't mean that it's the top, but in this particular case, it has been many times. It just means that the 100% measured move area. So in short, you shouldn't really be buying at the 100% measured move area. Now here on the SPX chart, we've used Fibonacci in reverse. So we've taken the high here from February 2020 to the crash low to the market high of 21. And that's given us a 100% measured move area for the pullback of right there. You see here on the 100%. And then again, for the next one, we've taken the high. Where is it? Let's see. Let's move it around a bit. The high here from the first wave to the low to the high, and it's given us that 100% measured move area for the pullback for the tariff crash. Funny how Fibonacci works so well, isn't it? Okay, when we come over to an SPX weekly chart, we're looking at the parallel channel here. So we can see here we've tagged it here, tagged it there and came back up, tagged it twice here, once there, and again here. And you can see each time, we've come back into the channel, which is obviously confirming that that channel is support. And then when we drag that channel up, we can see here multiple hits on the upper resistance. And then we see here an attempt to break through and a rejection. And we're going to see something else take place soon. We also see the trend line from the April low, which is holding up support coming up through there. We see this trend line here from the high of 22 to the peak across there in December and February, which acted as support right here. So these trend lines are all validating at the moment. If we want to have a look at that on a daily chart, let's take a look. You can see obviously the first support, resistance, support on this trend line, which drew through there, resistance, and we'll be coming back into some resistance again soon. All right, guys, if you'd like to join the Discord, it is free to join. The link is in the description. And if you would like to use the same indicators that I use to help with trading, you can click on the links below in the description. So here's an example here of the S&P. Obviously, we have downtrending here, an uptrend signal, and a buy signal here. And then we go back into a downtrend. I did calculate this the other day using the VIX futures chart for you guys. And one of you were asking about using this particular chart for the QQQ. So let's have a look. It will still play out the same. So we've got here a downtrend change. So we obviously, based on Fibonacci, all of this area is not a buy. You can trade this if you want, if you're wanting to, and you can still do well out of it, but you should be recognizing that you're at the 100% measured move for the Fibonacci, and you can play it. You can jump in and out, trade off the signals, and you'll do well. And you can also trade off these signals on both charts. But if we are to go over both, let's get the ruler here and we'll do a couple of trades. So we've got a first signal here. It's a risky play, this one, given that we know we're in an ABC correction. So 0.6% gain. I wouldn't have taken that trade personally. But then we have this one here. And I would weather this personally. It's a 3 or 4% gain if you wanted to stay in, but given that we're on a recovery phase, I would weather it. So if we're looking at the upper chart, our first signal to exit was there on the upper chart. And it's telling you at that particular point to be very cautious that it is about to change trend. So at that point, when we start to get the rollover, you should be looking at it around there. And then obviously, you look, we got the sell signal both on the same day. So that was a 25.89% gain. If we go to the next signal to get in, so we've got an uptrend change here on the VIX futures, and we've got the uptrend change as well on the QQQ. Now we've gone over here, and this one has told us to exit on the upper chart, which was a 4.3% gain, and that didn't go through any of this downtrending loss here. Then we've had the entry signal on the upper chart and the buy signal on the lower chart on the same day. We take that over to the next change, and it has told us to exit at that point with a dramatic drop. So we would take that exit for a 3.98% gain. The next signal to get back in based on the upper chart is right here. So we're going to take this trade, and the signal here to exit before the drop is 3.13%. The next trend change signal on both charts. Now here we have the drop on the upper VIX futures chart. It tells us to get out for a 4.36% gain, and you do not have any of that loss. If we go to the next signal, both on the same day, we then go across and we have a drop over here on this one, and we have the drop there. So only a 0.48% with a downtrending signal to exit. So still no losses suffered though, all up. We have an uptrend change signal to go on the Q. And then we have this big drop here. This is the only false signal that we've seen for the VIX futures chart. I did explain this in a previous video. So you would have exited here at a 3% gain. You would have missed out on some of this run up here. But that's not to say when we get back into that run there, because we went back into an uptrend change on the VIX futures, you would have hopped back in here. And then when you got your downtrend signal there, a 0.36% gain. So whereas our next one, we have the uptrend signal here, and then we have on the same day the sell signal of 2.64% gain. The next one, we have the uptrend signal on the same day, and then we have, it's getting a bit messy there, we have the sell signal here, and we also have it rolling over. Let me see if I can get that. The chart's a bit tight. I think that's it. 3.28% gain. The next entry signal is here, the 24th of November, and the chart is also reflecting the same. And then we have the sell signal here on the 12th of December, so I'll get that above there, for a 4.77% gain. And now obviously we are definitely at the 100% measured move area. We've traded sideways since then, so I would not continue to trade it. However, if you did wish to, our next entry would be here on the red candle, which is fine. It just hasn't uptrended yet. And then the next sell signal would be there for a 2.62% gain. That covers off the entire year. Okay, based on using those signals across the QQQ for all of 2025, would have netted a gain of 59.4%. And if we look at what it did for a buy and hold strategy, we'll take it off the first and we'll take it out to the 31st, and it's on a downtrend, so we'll go from the underside. So a 21.42% gain. So buy and hold was 21.42%, and trading with the buy and sell signals was a 59.4% gain. So next question you're probably asking is, how do we know when it's safe to get back in? Well, we use our market breadth chart. This is a members only chart using our indicators telling us when to buy and when to sell. And you can see here we had the green buy signal here, when to get in at the market bottom there, well, after it recovered, I should say, after the bottom. And you can see back here at the 2020 COVID crash, also the buy signal. It's very easy. This does it for you, but I'll explain how it works. Essentially, what we're looking for is 2 to 3 weekly red candles, followed by 1 weekly green candle. And at the same time, our market breadth dropping below 15% and then going back above 15%. Every single time you'll get the market bottom when you're doing it that way. Also on this same chart, again, this is a members only chart where we are looking for SMH on a weekly when it is above 100% above the 200 weekly moving average, and we get a pullback. So you see here, November 21, we were 103.56% above. Now, what happens there is price is getting too far away from the 200 moving average. So it will pull back. And in terms of a percentage, that was a 47.63% pullback. Then when we take it here, we've got 104.24 and 102.72. So those two triggers. And we take it off the first one all the way to the bottom, a 39.91% pullback. We've now had here above the 100% again, and this smaller pullback was a 15.49% pullback, and then now 104.7%. Where's it going to go? Nobody knows, but it's telling us not to be in the market, that's for certain. So I think this is why it is important to understand why the indicators are very useful in terms of day trades and longer term swing trades or holding. The charts tell us everything that we need to know, and understanding what they're telling us is what the indicators can do, which is why it's important to understand what exactly is happening. And as we saw here, we had institutional buying, which told me to exit that trade for that 3,500 or whatever it was profit. And we can see, similar with the institutional indicator playing out across all of the various indexes. I mean, look, now you can see potential selling. This isn't a hard selling there, it's potential selling by them. And then obviously price has dropped soon after. So when we get the really solid red bars, that's when, like these ones here are solid green. So this one here is a solid red. That's when they were selling there. Solid red here, they're selling. So tells you when they're buying, when they're selling. Our trend and buy signals also tell us when to be in, when to be out, how to know what to do, when to do it, and makes your trading a lot more profitable. All right. Thanks, guys. Have a great weekend. Bye.